Good morning, guys, and welcome to today's edition of the London Session Open. Today is August 3rd, 2020, and my name is 𝗿𝗲𝘁𝗵𝗀𝗀. I'm the Chief Market Strategist with ATFX UK. And we're going to take a look at the markets as we should do. We did have some volatile weekend for cryptocurrencies, so we're going to talk a bit about that. Bitcoin Cash, as an example, slid by 28% in about 10 minutes. So significant market volatility. Everything else is a bit quiet, but we'll address that. We'll also, of course, take a look at what's happening sort of for the rest of the week. So if you're new to this, don't forget to subscribe. And the reason for doing this is because we do this every Monday for about 15 to 20 minutes, and we'll give you guys a breakdown of what to keep an eye on for this week. And if you're new to me, my name is 𝗿𝗲𝘁𝗵𝗀𝗀, and here is my Twitter handle, @AlexFX00. That's the best way to keep track of me. As well, you have my email here at alejandro.zambrano@atfx.com. Okay, so what are we going to talk about? Sort of a bit of a macroeconomic update, week ahead, what indicators to look at, economic indicators to look at, and then we'll provide you guys with a major overview of major currencies, indices, gold, crude, and cryptocurrencies. If you do have questions, just put them there in the chat box, and I'll try to do my best to address them. And why should you watch this then? Well, we're going to cover all what I just said, but why should you listen to me then? Probably better to say it like that. Well, I've been trading since 2006, and I'm a profitable trader, whereas most people are not profitable. And it's not that I'm just profitable over a quarter, right? So the data you see, for example, spinning underneath this video is updated every quarter. That's what all FCA regulated brokers are doing. But it's not that I'm just profitable in this quarter. In fact, I've been profitable for quite a number of years. And hopefully I can share some of my wisdoms and understanding of the markets with you. And hopefully that can help you become better traders. And that's the ultimate purpose. And that's why I think you should stick around here. And I produce this market update, which is free. I also do like the premium trading course, which is also free if you have an account with ATFX. So instead of sort of wasting a couple of years trying to understand the markets yourself, this could potentially put you on track much faster. It's similar strategies I work with. So you walk away with 2 strategies, advanced money management techniques. And if you're totally new to the market, I still cover the basics. I'm not going to cover what the pip is, but I will cover what the trend is. So anything about trading, technical analysis, we cover that. Who is the broker? ATFX, which I represent. FCA regulated, headquartered in London, about 400 staff worldwide. You can trade currencies, indices, stocks, and cryptos with them. And you get the premium education like the one I do. You get Trading Central Signals, which is a registered investment advisor. And you get the coaching as well. So you get that included actually with a trading account with ATFX. If you have any questions, again, ping me via AlexFX00. Alternatively, just email me at alejandro.zambrano@atfx.com. I'll send you the details in the chat in a few minutes. Let's just get going with the presentation. All right, so what's up for this week then? We have some numbers out of China, the CAC manufacturing PMI. That rose to 52.8 versus 51.3 anticipated, and higher than the 51.2 prior. So that's good numbers, slightly in the Chinese manufacturing industry being operating at a slightly higher pace than we saw in the prior month. This afternoon, according to the calendar, we got the ISM manufacturing PMI, and that's supposed to rise to 54 from 52.6. And this is July, but this should be the August numbers here. And then you have the RBA rate meeting that is happening on Tuesday. People don't think they're going to do anything, but the Aussie dollar itself is quite strong. And people are speculating that they might hint or push towards negative interest rates, maybe more QE, and definitely try to talk down the Aussie dollar to get people less excited in buying it. Because what's happening here is that when we had the crisis, COVID-19 crisis, at the beginning everybody sold the Australian dollar because it's so closely linked to China. But as you can see from the numbers up here, activity has picked up in China. We're definitely not back where we used to be, but we're definitely picked up. It's not like a doomsday scenario as people were pricing in. And as those flows reversed, the dollar softened dramatically and the Aussie dollar gained. The problem with that, though, because Australia is an exporting nation, they will suffer on high currencies. And as well, I think it was Melbourne, they introduced curfews, so you can't go out now after a specific time to curb the spread of the COVID-19 virus. Tuesday, unemployment figures from New Zealand. Those are interesting. They always tend to move the markets. You want to keep an eye on that. Wednesday, ADP numbers gives you a bit of a hint of how the labor market did in July. People think that we'll see less of a job growth creation, 1.25 million jobs created versus 2.36 in the prior month. Then you have the ISM non-manufacturing PMI, and then you have Bank of England interest rate meeting. That's obviously super important for the pound. Nobody really has any anticipation of any changes, and I think the last one was really boring. I think, or maybe it was the ECB. You see, I don't even remember. Because these things to come and go, you'll have high volatility on Thursday in the pound, but then you can trade on Friday, right? Or just after the event. You don't have to be positioned on the day, but that's a high volatility event. And then of course, by the end of the week, non-farm payrolls from the US and Canada. Those are interesting because you tend to have a lasting effect on the currency markets. So those are the top events for this week. Now let's dive into currencies first. Right, this is your euro versus the USD, and as you know, the euro has just been going straight up, right? And as well, you have the pound going straight up, gold going straight up. It's just the dollars have been hammered, and I've been trying to get involved in pullbacks. So we had some success, but mostly the market hasn't pulled back enough for me to get involved in this particular market. But here it has. It went all the way up and then it tumbled lower, but the trend remains bullish above 1715, and I think we can go up to 1850 possibly today, maybe 119 over the next 2-3 days, and then we'll see. I mean, if we take out this level, we're probably going to trade a bit lower, so we need to be attentive here. I wouldn't be positioning myself to sell just yet because we're still dealing with an uptrend. But maybe something will develop here that will give us the possibility to short sell this market. GBP versus the USD, it's also bullish, and I've been looking to buy on dips. You can see here it's slipping away again, and the market, I wanted it to trade a little bit lower, but it didn't. So I think we need to increase the buy spot now because it's looking to bottom out, and I will push this a bit higher like that. If we're lucky, we'll revisit 30.57, and then we'll go upwards. I'll remain bullish above 29.43. I think we can hit 31.16 and 32.50. All right, this is the dollar versus the Japanese yen. And the dollar versus the Japanese yen softened last week. Actually, it went upwards last week. But the general idea we had was, sell here for this to come down. It did do that. So congratulations if you're able to make some money on the back of that. But then the market rose sharply and now it's coming back down again. If you look at it from a big picture perspective, I do think we're gonna revisit maybe 105. So if you really wanted to, you could sell up here. But I'm not very interested in this at all. But it is a downtrend. It's a bit difficult, I think. But if someone put a gun to my head and said you need to trade, I say I'll sell at 106.17 with a stop at 107.44 and a target 105, and maybe all the way down to 104.43. Aussie dollar versus the USD. It did try. So last week we said, I think it was last week we said, look to buy around these levels here. I think it was, and here I remember this. That went well. But when we revisit these levels now, the market traded below support, and that turns things slightly bearish now. But we haven't properly breached anything yet. If you look at this, it's still an uptrend, and I'm neutral now. If you look at the New Zealand dollar versus the USD, if we take out 66.08, we can probably trade down to 65.54, something like that. We got 1, 2, 3 lows, the same levels. This is almost like a rectangle. It is in a rectangle, but it's like just a range, really. Gold. All right, this is gold. So the market has started to converge. It's not really going anywhere. The reason for this is because we had quite an amazing run. Remember, I was bullish from down here and upwards. Even myself, I bought on these different breakouts. I bought silver as well, so I had a very good July. But now as we hit August, market volatility here has slowed, and we also talked about buying here. Do you guys remember that? Buy here for this to go up. Spot on. Everything has been working out really good, and soon I'm gonna start to charge you money for this. No, it's a free webinar, and we're gonna continue to have them as free webinars. And what's happening here though is that things are maturing. This pattern is not really as bullish as it used to be, and I think this is an issue because soon what's going to happen here is that you could either break to the upside or you can see a bigger decline, and that's what I'm looking at. But my preference would be potentially buy on a break to 1988, which is the all-time high, and then target this towards 2030 and maybe just being bullish about here. If you ultra bullish and you really just want to get involved, then maybe doing something like this. If we take out this trend line, we'll go down a little bit lower, but we're just going to be stuck in a bigger range. So I don't think we should be too excited about this. Here's another very good example of a similar situation. So here are crude oil prices. So crude oil prices, this is not 100% correct because this shows negative prices. But as you know, we went up. They were up with 300% or so, because they were trading about $10 a barrel, something like that. It's not 100% correct because you trade futures here, so you can't just buy and hold. Only if you were trading spot. So if you could hold the barrel somewhere, then yeah, you made 310%. And it's just very big, like industrial production and industrial guys that could do this to some extent. And yeah, amazing rally, far stronger than gold if you think about it. But what's happening here is at the end, people, excited, economy is reopening, not necessarily in the US, but many other places of the world. And you have this lack of ability to trade higher because most of the good news is priced in. And then at the end, we took out this level instead of breaking higher. I bought a bit here somewhere in heating oil, traded that bit to the upside, and luckily I got out, because then a few days later the price went all the way down and I would have been a break even. So what's the game plan here then? The game plan is for now actually to be neutral, but you have a double bottom here, and that double bottom could potentially trigger a slide to the downside. And if you think about it, this pattern here doesn't look too much different to the French stock market and the Spanish stock market, which actually turned bearish already. So we need to be we need to be careful here. For now though, the trend remains bullish. It goes down to 39, 34. I think people are going to be buying there. We stopped just below 38.51. But remember this, it's getting a bit tired. You see, this is gold. Gold is reaching that similar pattern here, right? Like a wedge. German DAX. You remember German DAX? I was bullish and I think I got stopped out here. And from that point onwards, I was neutral. And that was good because the market did finally slip lower. And we are dealing with a downtrend. There's no question about that. In the very short term, you are dealing with a downtrend. The trend is bearish below 12,971. It might swing up to 12,717. And I think people are probably going to sell it back to the lows again. But I wouldn't get too carried away. I think the way US stock markets look like, I think this is just going to develop into some big range. Because if you look at something like the S&P, it's still bullish. I did a video last week and I said where to sell the S&P in case you're bearish, or where to sell the S&P. And I said that on a break to 31.96, we could sell the S&P and target the downside. But we didn't do that. And in the same video, I said, look to buy here. And that worked out great. We moved up sharply and then we went back a bit. But this technically, we're still dealing with this ascending triangle pattern that triggered already here on July 6th. And that target is unmet. At the same time, you have a bit what looks like a little range here, which could just take out, and then suddenly, I mean, this is not even a descending triangle anymore or a head and shoulders. Suddenly you're looking at something like that. And if you look at the Nasdaq 100, the market here as well is trading sideways. and let it rest here for 2-3 days. That would be great. But then if we take out the all-time high, if we rest here, that low, whatever's created here, is gonna be the trend defining level for a breakout, where we could potentially be, buying here, stop loss goes here somewhere, and then we'll target the highs like that, and you get yourself a 2.73 times risk reward ratio, potentially, depending on what happened on that day, depending on how tight we can come with the stop loss. So things are here looking rather bullish, I think, and could potentially trade upwards, but we didn't have those triggers yet, and that tells me that maybe the German DAX is going to stabilize here. So I wouldn't be betting here, but if you're bearish, let it go up and then let it go down. If we do take a look at the GPN 225, which we mentioned last week, let's see. We did have some nice, we got that double bottom low and low, and we said sell here. We were trading here, I think, and then we went upwards. I said sell here, and then it went down. Pretty much hit target. And this is where the German DAX is now, somewhere. The German DAX is here somewhere. Okay, good. I said we're going to talk about cryptos. So let's talk about cryptos. Scary, scary cryptos. They can be scary if you don't know what you're doing, and if you're trading with leverage, yeah, you'll be punished. You'll be punished hard. You don't have to trade with leverage. You could trade with leverage, but I think there was some data. Some 74,000 people were forced to liquidate their positions in some of these markets on Sunday, because this is Bitcoin Cash, and Bitcoin Cash, I actually bought it down here. So I bought it here at 248. It went up with about 15%. I took profits, and then this is within a bigger rectangle, and the market looked to head higher on the break here, but my plan was to get involved here on that break and then get involved. But then I was looking for a bit of a pullback. I wanted to optimize things, and that didn't really happen. And then it went up and up and up. It was a bit painful, actually, because we're almost at target, and I'm like, I should have held this here, and I would have made like an additional like 20% on my crypto holding, and from the very low I would have made some 40% on my holdings. And I think half of my money is on cryptos, so you get an idea how big of an impact it would have been. But I don't worry too much. I had a really good year so far, and hopefully we will continue. Now what happened here, no one really knows, but someone just decided to sell a lot of Bitcoin Cash and a lot of other coins. So we're trading here at 330 at 5:30 a.m. London time on Sunday, and then we're down here at 242. They had that massive slide, and that's why I don't trade cryptos on leverage. If one is gonna buy, one should trade with, like in my case, I have about half of my portfolio in cryptos. So I'm not even trading with all my money I have in my account. I'm trading with half of my money. And then I don't trade with leverage. And then I try to get good entries. So I don't take these huge risks. You don't have to do that. You can still have like a very good return without leverage. And if you're trading with a CFD broker like ATFX, how can you deal with this then? Well, just to give an example, you have $10,000 in your account. You can buy for $5,000, or you can buy for less. That way, you can still get some amazing returns, but you wouldn't get liquidated like here. Because even if you have 2 times leverage here, from the very high, just imagine you bought at the very high and then the thing slid. 28 multiplied by 2, that's like 60% almost. 60% is a big hit to anyone's account. So what's the game plan now then? I think actually this will probably try to recuperate the highs. What's kind of interesting is that we slid, and even on the 5-minute, we never really spent too much time below 272. Below 272, we just spent like less than 5 minutes, if not less, and then we bounced. And the trend now within this very short term is in a tiny little range, and we could potentially just break to the upside. And I do think that's what's going to happen. I think we will trade upwards ultimately, and hopefully we're going to be at the 357 at one point, as long as trade above this level here, which is 271. And if you look at things like Bitcoin Cash, also Bitcoin, normal Bitcoin, one of the reasons why I'm enthusiastic is because we breached that major level. So we breached this February 14th high, took that level out, and this triggered a break of a triangle. We already spoke about this and the perils of trading triangles, but it sure looks like we did breach that. And that triangle has a target of 22,889. And I think realistically we'll go up to 13,829. Might go all the way up to the highs, and then we're just looking to buy dips if possible. So what happened here is that this level now, this high, which is 10,546, is now support. And you can see the market slid below, but within this little space here, you can see that this is support down here, and this is resistance. And this is definitely high speculative stuff, but I think this makes a lot of sense. Some people might say, oh, it's gonna do a head and shoulders pattern. Yeah, it might do a head and shoulders pattern, but I don't think it really matters too much for now. Okay, good. Let's see if you guys have any questions. I have 3 minutes left, then it's 10 o'clock, and I would need to leave you guys because I have a meeting. Again, don't forget to subscribe. Click on that little bell button, click on that subscribe button. And don't forget to hit that like button so you can join me here on Monday next time. You get a notification. People got a notification. They know that we're live right now. And as well, if you have any interest in the educational courses, you want to shorten the time it takes for you guys to become a profitable trader, then I have that crash course in currency trading. Because what happens is that if you're just going to discover things on your own, and if you're barking up the wrong tree, if you're doing the wrong things that I did, you can easily spend a good number of years. That's exactly what I did. I had decent success in the beginning that got me hooked. I think I made like 40% on my 2,000 euro account when I was like 19. And then I thought, oh, I'm great. I'm not going to be able to have a normal job again. I'm just going to be trading for the rest of my life. And everybody's done that. Well, not everybody, but a lot of people have. And then you get hooked, and then you start to realize that, yeah, okay, that was a very good year to trade, but then the next year is not very good. And how do you survive that? That's what takes time. Everybody can double their account, triple their account, keeping their money and trading for as many years as I have. That's a different ballgame. All right, let's see if there's any questions. So we have Mauricio and Antonio. Good morning to you guys, and thank you so much for joining me today. All right, so we don't have any question, which is all good. We're gonna do right now, we're gonna wrap things up, and I hope to see you guys very soon for the next market update. Thank you so much, and happy trading. Bye-bye.